The Federal Reserve has released a hypothetical scenario for its 2023 supervisory stress test to show that banks are likely to perform in a recessionary environment. The Fed has adjusted its bank stress test, but its now testing standards are said to leave serious holes in determining the true strength of a bank. The Fed is overlooking crucial areas in the banks, such as estimations of trading losses and measuring counterparty default risk. The assumptions in 2023 severely adverse scenario are not significantly different from the previous year, except for a significant higher starting level of interest rates, a sharper decline in the house prices due to a higher starting point, and less severe asset market assumptions. And also keep in mind, Tesla has a lot of different projects that they're working on, including the Optimus, which I think has a lot of potential. And they have a lot of other secret projects that not many people know about behind the scenes. So those are other things that you want to keep in the back of your mind when you're thinking about Tesla. Barron's Fund, Tesla would reach 500 per share in 2025 and 1,500 by 2030. Now, I believe the same thing's going to happen. And I do believe that it's possible for these prices because Tesla's doing a lot of amazing things. The company continues to innovate. Their cars are selling. There's always a demand for it. And they're taking competition seriously. And they're always constantly improving. Tesla made up 1.6% of the firm's assets under management at Barron. Despite being viewed as a riskier investment at the time, the firm believed that Tesla's potential and predicted that the share price could increase 20 times in the next 10 years, which they were correct. Tesla is the largest electric car manufacturer in the world, and I believe that they're going to be the most valuable company one day in the stock market, having sold over 1.3 million electric cars in 2022. Its competitive advantage includes proprietary batteries and a planned introduction of a lower-priced version of its vehicles in 2024. And then you also had the Cybertruck, and I also believe the Robo or the Optimus is going to be an amazing thing, and a lot of people are going to want it. And this gives the company a competitive advantage, including the firm has reduced its single stock risk by selling 25% of its shares, but it still holds 11.6 million shares valued at $3.1 billion. The firm predicts that Tesla's shares price will reach 500 per share in 2025 and 1,500 by 2030, based on the long-term sales growth and high profit margins. The firm has significant investment in SpaceX, which is exciting to hear, and which I'm excited about because I also own shares. So now let's talk about the real estate market. The housing market is slowing down again as high inflation rate drive up mortgage rates. And as we can see, people getting laid off left and right from good companies from all around the world. Because right now we did all that money printing, now we gotta pay for it. Home buying demand is falling as mortgage rates rise, making the housing market less attractive for prospective buyers. Experts caution that the housing market recovery is contingent on how quickly the economy can tame rising prices or inflation, whatever you want to call it. Home prices have much further to fall. They are expected to decrease by about 15% over the next year. Despite the higher mortgage rates, today's 30-year mortgage rate is lower than any time in U.S. history before the housing bubble that led to the subprime mortgage crisis in 2007. The real estate market is on a freeze, but billionaire Grant Cardone says investors will save the day. This might be a good opportunity for some investors that are looking into real estate, but I still believe we have a little bit more to fall. So if you're looking into this real estate investment opportunity, Keep an eye on REITs too, as they're down. REITs have declined in 2022. Not all of them should be discounted, specifically blue chip apartment REITs, such as Avalon Bay Communities and Candim Property Trust, offer a good risk to reward ratio. These companies have a strong investment and great balance sheets, long track records of outperformance, and own Class A apartment commodities. Despite their resilience, these companies are trading at a historically large discount to their net asset value, estimated to be around 30%. So that gives it a good buying opportunity. And that the market's pricing in the unfound, as these apartment REITs have fortress balance sheets with low leverage, long debt maturities, which will limit the impact of rising interest rates. Additionally, interest rates are only high because of inflation right now, which is beneficial for these apartment REITs as it allows them to increase their rents. Furthermore, rising interest rates will make it more difficult and expensive for developers to enter new construction projects, resulting in less competition and less competitive supply, which in turn grows the pool of renters, increasing the demand for the apartment in these REITs. Keep in mind, this is not financial advice, but here's the two REITs that you should take a look at. And as you can see, they had a good earnings. And right now they're currently trading at, AVB is trading at 179.27. It is up all-time high 758. The 1 year, it is down 24%. It pays a nice dividends of 3.68. Then you have CPT, which is currently trading at 120. It does pay a nice dividends of 3.33%. Year to date, it's down 26%. The 5 year, it's up 46%. And then the all-time, 416%. Me, I'm personally waiting for a price like right here, anywhere between the 71 to maybe 79 range. If it hits that, I'll consider buying. And let's look at their financials. They did beat EPS, but their revenues are down 0.08%. Net change in cash is alarming to me. So another thing that caught my eye was ChatGPT. There was a couple videos out there that said the market was going to go down on February 15th, which it did. But they were talking about a market crash, which I don't really call it a market crash. It was down, but it's not down bad. Now here's another article I found that's saying ChatGPT says the market will tank on March 15th. And we know a couple years ago that it did tank around the March time, but it was due to something that everyone knows about. So I'm curious. Let me know in the comments below. Do you think the market will crash on March 15th? Or do you think we're going to be going the normal route? Here's another article that I found. The breakout stocks of an industry set to grow 40x. So they believe that the Energy Information Administration recently said that this industry will grow 20% or 20x in the US by 2025. It's the energy storage technology. So if that were the case, STEM stock should be 20x or 40x, whatever, by 2025. And for those of you that don't know what STEM stock is, it's an amazing company that we're going to look up today. And I'm just waiting for the stock to drop at a certain price. And if it does, then we'll be buying a few shares. But so here's STEM's website. Simplify your clean energy management. STEM is a global leader in AI-driven clean energy solutions and services. And here's a video. If you want, you could check it out whenever you have free time.
Solutions and services by their fleets, and we feel like we're right in the middle of it. As we continue to scale our solar and energy storage business nationwide, STEM has become one of our preferred partners.
And you probably want to keep an eye on Planeteer stock as well for these three reasons. Planner Shares stock is in a technical breakout. It is too cheap for its own good, and the margin expansion. And when you look at the public investment fund and you look at the 13F filing, you will see 24.48% is Lucid Groups, aka Lucid Motors. And then you have Activision Blizzard, EA, Utility Selected. And if you go to their main website, you can see all their 13F allocations over time. And the Fed has failed to slow demand. You know what that means? No upside for stocks as policy tightens. As we can see, most likely more interest rates increasing, as we're still dealing with inflation and a lot of people still getting laid off. Companies are cutting back, trying to see what's happening and what's going to happen, where they should spend their money. And as you know, Tesla stock has rebounded in 2023, surging by 64% in just 7 weeks after suffering a record plunge in 2022. During 2022, a series of dramatic events such as the Federal Reserve aggressive interest rates, Elon Musk's Twitter takeover for $44 billion, Tesla missing delivery targets, competition, demand might slow down. A slowdown in China's demand led to Tesla's decline in the stock market. But Tesla's market capitalization, which reached a record high of $1.2 trillion in 2021, plunged to a low of $341 billion in December 2022, before surging back up above $600 billion in 2023. Keep in mind, all the stocks that we talked about on this channel are just for entertainment purposes. Do your own research, do your own whatever you need to do to find out if a stock is good for your portfolio. But let's get right back into it. As we see, gas prices are primed to rise in a few weeks, but American drivers won't be hit with a record cost again this summer. But this might be a good opportunity to maybe buy some gasoline stocks, which Warren Buffett did, which I already done. As they're constantly going up, and I'm up on all my gas stocks, it might be worth consideration. But it's not financial advice. Do your own research. And as you can see, U.S. stocks end up as a mixed, as the Fed officials sound off on inflation fight and the path of future rate hikes. Well, in my opinion, I just think we should hike rates. Do 75 and 100, get it over with. Yes, it'll send everything down, but you say you want to control inflation. Why not just get it over with? Instead of doing the 25 basis points increments, which is bad.